90% of America's fresh tomatoes hail from Mexico, a $3 billion riverside economy that until recently flowed under the radar. That changed abruptly on July 14, 2025. Without warning or a roadmap, the U.S. government imposed a sweeping 17% tariff on every Mexican tomato, shattering decades of seamless trade with a curt press release, leaving no room for public debate or even a moment of transition. The impact was instantaneous and jarring. In cities like Raleigh, North Carolina, tomatoes jumped more than 40% in price. In one grocery aisle, a mother hesitated, tomato in hand, before putting it back. While restaurants quietly dropped salsa from their menus and school salads lost their crimson flair, across America, an anxious question echoed, unspoken but insistent: what just happened? This wasn't about farming, nor was it about fairness. Something deeper had shifted. The humble tomato was now at the epicenter of American politics. July 14th didn't just raise tariffs, it ended the 2019 tomato suspension agreement between the United States and Mexico. This accord, credited for years with keeping prices stable and supply chains humming, functioned like a diplomatic safety valve in an industry long prone to friction. Past disputes were handled with negotiation and tact. This time there were no negotiations at all, just a 17% tariff, cold and immediate. Sources familiar with the move described chaos. Axios and ABC News both reported that there was no transition period. Tomatoes already racing across the border in trucks were taxed on arrival. Importers felt blindsided, economists called it reckless, and grocers faced what amounted to a slow-motion crisis. Within 2 months, tomato prices in the U.S. surged between 30% and 45% in major markets. Raleigh's beefsteak tomatoes soared from $2.99 to $4.35 a pound. Los Angeles shoppers saw Roma tomatoes, previously under $1, leap to over $3.80. For working families, it wasn't just inflation. They now faced invisible cuts to mealtime satisfaction. Salads vanished from public school cafeterias, fast food chains swapped out fresh salsa for processed options, and in home kitchens, tomato sauce was stretched a little thinner, night after night. But the economic cascade was just beginning. In Florida, scores of small Latin-owned import businesses closed their doors within weeks, unable to absorb the blow. The layoffs came fast. Warehouse workers, truck drivers, farm liaisons, all suddenly deemed expendable. For people who'd spent decades connecting U.S. demand with Mexican supply, the termination felt abrupt and cruel. Even experts struggled to comprehend the scale of the policy's shock. Trade analysts had predicted shifts in tomato policy, but none foresaw a flat overnight tariff with zero consultation. One July 2025 MarketWatch report warned that the implosion of the tomato supply chain wouldn't just tank produced prices, but could also ripple through packaging, refrigeration, and transportation sectors, kneecapping small logistics firms and pushing up food prices more broadly. What did Washington say? The answer was deceptively simple. It was about protecting American farmers. But was it? Florida's tomato farms only operate in certain months. Northern states like New York, Illinois, and Minnesota depend almost entirely on Mexican imports to stock their produce aisles. Even California, long the nation's tomato basket, has seen its harvests shrink year after year, victims of drought and a labor crunch. As America struck at the border, Mexico engineered a new escape route. With silence and precision, they built an alternative, one that would quietly, irrevocably reshape North American agriculture. Mexico's response to the sudden tariff imposition was not one of fiery retaliation or public condemnation. Instead, it was characterized by calculated efficiency and quiet resilience. Without fanfare, engineers and logistics experts collaborated to forge a new corridor that bypassed the United States entirely. This was not a hurried workaround but a strategic pivot that would permanently alter the flow of fresh produce. In just 3 short months, a cold chain corridor emerged, coursing from Mexico's agricultural heartlands in Bayo through northern Chihuahua before veering northeast into Canada's Ontario and Quebec provinces. The trains on this route glide through new territory untouched by U.S. customs checkpoints, tariffs, or bureaucratic delays. Refrigerated containers precisely controlled between 1 degree Celsius and 1 degree Celsius above zero ensure that tomatoes, berries, and peppers arrive fresher, with shelf lives extended by 4 to 5 days. What began as a tactical maneuver soon evolved into a long-term embrace. Major Canadian grocery chains, Loblaws, Metro, and Sobeys, didn't merely test Mexico's produce, they cemented commitments, signing 5-year contracts that signal a permanent shift in supply chain loyalties. From Ottawa's perspective, this strategy underscores a stark contrast with America's erratic trade posture. Where Washington flips policies every 4 years, Canada honors contracts over decades. The numbers tell a story of swift realignment. By 2026, Canadian imports of Mexican fresh tomatoes are projected to surge to nearly 48% of the total market, up dramatically from less than 1% just 2 years prior. And tomatoes are only the beginning. Strawberries, avocados, and bell peppers now flow through the same cold rail lines, bypassing U.S. ports for Canadian distribution hubs from Quebec City to Vancouver. Meanwhile, the U.S. market experiences the tariff's painful consequences in real time. A July 2025 report from supply chain analytics firm A-Tools reveals wholesale prices on imported tomatoes jumped 22% in July alone. Importers along the U.S.-Mexico border, from Buffalo to El Paso, are shuttering warehouses and shedding jobs at alarming rates. One distribution firm in McAllen, Texas, laid off 74 workers in June, a single jolt felt by many communities. But the human toll is what resonates most poignantly. Maria, a single mother in New Jersey who once picked up a pound of tomatoes weekly, now resorts to canned beans to stretch her grocery budget. The taste of fresh produce, she notes, is an unaffordable luxury. Across the country, from Laredo to Detroit, families cut tomatoes, salsa, and fresh salads from their meals. SNAP recipients and working-class consumers alike feel the squeeze. Once commonplace ingredients, now symbols of economic strain and government gambles that pay off nowhere but in headlines. It wasn't an accident. The tariff hit at the border now ripples in lunchboxes and pantries across America. Simultaneously, global trade routes are realigning. Supply chains in Europe and Asia are taking note. Rotterdam and Hamburg freight handlers reroute Brazilian organic vegetables through Dutch ports, circumventing U.S. intermediaries. Colombia and Peru redirect exports via Vancouver and Halifax. In East Asia, delegations visit Mexico's new export hubs not to protest but to understand how resilience was engineered through strategic alliances and infrastructure investments. Canada's moves haven't gone unnoticed. Late in September 2025, Ontario's AgriCorp began testing dual-language packaging that labels Mexican tomatoes as Canadian products under USMCA rules, a legally sound, efficient way to reinforce supply chain security and avoid tariffs. In financial and trade capitals worldwide, analysts are sounding the alarm. The unraveling of the North American tomato trade is a precursor to broader strategic shifts. This isn't just about fruit. It could presage a decoupling from US-centric supply chains in autos, semiconductors, and biotech. For the world's partners, America isn't being boycotted, it's simply being bypassed. Mexico didn't stage a political protest, it acted with precision. Canada didn't self-assert, it quietly extended an open hand. American consumers face higher prices for diminished choice, holding fast to the belief this is about supporting farmers. But the question remains, is it? The tomato tariff saga reveals more than just a battle over produce. It is a microcosm of how global trade is reconfiguring in an era of political unpredictability. The surge in prices and the shuttering of businesses on the US side are symptoms of a deeper strategic realignment, one where trust, stability, and foresight are becoming the rarest currency in global commerce. American consumers are quietly paying the heavy price of a policy gambit that promised to protect domestic growers, but instead inflicted collateral damage on families and communities. From Maria in New Jersey, who now stalls her son's fresh tomato intake for canned alternatives, to Tom, the retired welder in Texas, who has relegated fresh produce to a nostalgic memory, the consequences are palpable. Meanwhile, Mexico's silently executed pivot to Canada signals that commercial relationships are increasingly defined by reliability over rhetoric. That steady shift has been underpinned by cold chain logistics innovations, multi-year contractual commitments, and a shared emphasis on minimizing disruption. The rail corridors linking Mexico's farms to Canadian distribution hubs are more than pathways for produce. They symbolize a new geopolitical reality where supply chains follow certainty as much as geography. For U.S. policymakers, the tomato tariff presents a cautionary tale. The attempt to shield local farms has largely backfired, driving up consumer costs, destabilizing allied businesses, and accelerating supply chain realignment away from American soil. The question now is whether this is a warning or a prelude, a first crack signaling an unraveling that might extend far beyond tomatoes and test America's place within the global marketplace itself. Will future administrations learn from this episode, balancing protectionism with pragmatism? Or will the political theater of tariffs continue to eclipse the fundamental economics that underpin food security and trade relations? The stakes could not be higher. From the produce aisle to the assembly line, from pantry shelves to manufacturing floors, America's approach to trade will determine whether it remains a trusted partner or becomes a cautionary tale of isolationism. The tomato was just the beginning. As the world navigates a landscape shaped by unpredictability and shifting alliances, one thing is clear. Stability, certainty, and smart partnerships will determine who thrives and who watches trains full of fresh produce speed